She is the head of policy at the head of U.S. policy at Morgan Stanley Wealth Management. Good to have you. You know, it's good to be relevant, Monica. I couldn't imagine you're more relevant than right now for clients who are trying to figure out every utterance we get, whether it's out of Trump or Lutnick or Navarro or Bessent. What are you telling them when they come to you and say, OK, what do we really think the policy is going to be?
Yeah, when we're trying to decipher all of these messages, it's really important to stay focused on Donald Trump, on the president and what he's saying. We're getting a lot of sort of mixed messaging, and that's adding to the volatility that we've experienced in the last week and a half. We started today on a high note. We ended a little bit up, right? About what, 0.79 up today. And that isn't the end of the story. And that's important to remember, because even though we've gotten this 90-day reprieve, like was mentioned earlier, there is going to be a study, and there is a study ongoing on semiconductors, and that could create additional pressures when it comes to tariff news and potential volatility.
Yeah, but even listening to the president is not exactly that straightforward, is it? I mean, I could just reference today's press conference in which it wasn't about tariffs, but he mentioned Apple, but you couldn't really figure out what he was really going with or might, and then the automakers as well, giving them some relief. I mean, it's not exactly that easy to follow a roadmap, even if you just listen to Trump, is it?
The roadmap is difficult to decipher, and that's why it's important to stay focused on his comments, even if they're vague. The important thing here is that we are likely to get some certainty as the congressional budget is finalized. Now, that is a ways off, so we do have about until August where we get some clarity on policy, but they are looking to use those tariff revenues as a pay-for some of their tax cuts. And this is a little inside baseball on budgeting, but it's critical when we're thinking about when market volatility could come down and policy certainty re-enters the mix. So listen to the president and then also watch what Congress is doing on the budget front.
All right, but I got another almost 90 days before the rollback that took place on the tariffs might go back into effect. I mean, what do you think is going to be the next tell here in terms of how this is going? Is it going to be potentially getting some deals with some of our trading partners?
That could be a tell. There are over, 70 countries to date that have gone to the president to try to renegotiate the 10% universal tariff and the reciprocal tariffs already. What's important here is that we have to remember that even if we get to a place where there are no reciprocal tariffs and we're at that 10% universal tariff, anything additional to that could be quite inflationary. So if we're looking at the 145% on China as it stands, plus that 10%, our effective tariff rate has gone up from 3% to 18%. Add in any reciprocal tariffs, that goes up, and it could fan inflationary pressures. So for us, what we're telling our clients is to not have knee-jerk reactions, right? It's easy to want to have a response, especially on the investment front when you see news like this. So stay away from those knee-jerk reactions, stay focused on your long-term investing goals, but also look to ultra short and short-term fixed income while, essentially it's a hedge away from some of this volatility. Yeah.